In today's video, I want to give you a status update. I want you to know that the US government's debt crisis is getting worse in 2025. So in today's video, I want to show you the numbers. Okay, so to begin, you should know that the federal government has accumulated a record amount of debt, which is currently at $36.2 trillion as of today. Okay, so how did this happen? How did we get here? So I would say it's very simple. The federal government spends more money than they bring in, and they have to keep borrowing more and more money. Now, I want to show you this chart of how much money the federal government has been borrowing each year. Again, this is to fuel their overspending. So this chart goes back to the year 2000. So here you can see the federal government really started to borrow significantly more money after the financial crisis. But that was nothing in comparison to how much the government borrowed during the pandemic in 2020 and 2021. But listen, even if you ignore those pandemic years, so take a look at this, you can see that the federal government's overspending has been accelerating and quite consistently, as you can see. So in 2022, the government had to borrow $1.38 trillion. In 2023, they had to borrow $1.7 trillion. In 2024, they borrowed $1.83 trillion. Now, I want to show you how the government has been doing so far in 2025. But listen, I want you to keep in mind that the federal government runs on a fiscal year. So the government started their 2025 in October of 2024. So here's the data for the first 5 months of 2025. So this purplish line represents 2025. And as you can see, we are off to a record-breaking bad start in terms of overspending. And take a look at last year, 2024. So that's that greenish line right there. So for your convenience, I've circled in blue the current deficit for 2025 compared to where we were the same time last year in 2024. So as you can see, 2025 is not going well. The government's current deficit for 2025 is at $1.15 trillion. So same time last year, it was at $828 billion. So the CBO is projecting a 2025 full year deficit of $1.9 trillion. So that would be a little bit worse compared to last year. Now, another big problem for the US government is rising interest rates, as you can imagine. So when interest rates were abnormally low, or I should say artificially low, the government did a lot of short-term borrowing. And they financed this short-term debt at extremely low interest rates, which is really good for them. But now those short-term loans have been maturing, little by little. And now the government is forced to refinance their debts at much higher interest rates. So that means that the government is going to have to pay much more in interest expense. Okay, so I want to show you this chart. As the government accumulates more debt, and as their lower interest rate debt goes away and gets replaced by higher interest rate debts, then of course the interest payments are going to become a bigger concern for the US government. So here's the situation in 2025. For fiscal year 2025, the government has paid $396 billion in interest so far. In 2024, it was at $350 billion at this same point in time last year. So the truth and the reality of the situation is that the interest expense just keeps getting worse. That's clearly because the government goes deeper into debts and because the interest rates, because the lower interest rates are being refinanced with higher interest rates. Okay, so listen, I want to show you this, and this is so important because a lot of the projections that are out there, they're most likely incorrect. So this is the Committee for a Responsible Federal Budget, and it's showing that the projection is, and no surprise, that the governments will continue to spend more money than they bring in, and that the government's going to go deeper into debt, okay? But all of these projections, not just this one, but all of them that we read about, they're most likely incorrect because they don't take into account President Trump's tax cuts, which is going to be trillions of dollars, and also additional one-time spending, like, it could be stimulus, or it could be bailouts, it could be, aid packages, whatever they may be. So here are the debt projections. And I like this one a little bit better because as you can see, they give a separate projection in light blue in the event that the Trump tax cuts get renewed, which I believe that some form of it will be renewed, which means that all these estimates that are out there, the mainstream ones, they're undershooting how bad the debt crisis really is and how fast it'll accelerate. Now, I want you to take a look at this. The Committee for a Responsible Federal Budget wrote this on March 27th. So it says, and these are their words, so I'm just quoting them, the long-term outlook shows that debt will surge past record levels. Deficits will rise even higher. Spending will continue to outpace revenue. Interest costs will explode. Social Security is only 8 years from insolvency. Now, please keep in mind that they're only confirming what we already know, that the debt crisis is still out there and it is accelerating. And this is going to end badly. That's all I can say. It's just a matter of time. But you know what? I want to be positive about this whole situation, so I want to share this optimism with you. So hopefully this cheers you up. So please take a look. The United States debt to GDP is around 120%. The good news is that Japan's is close to 250%. So in comparison, I guess relatively speaking, 120% doesn't sound too bad, right? But if our debt goes up, which, clearly it's going to go up, and if we have a recession, which means that GDP is going to fall or at least stall, then this is going to spike up this debt to GDP ratio. But that hasn't happened yet. And again, I'm just trying to be optimistic. Okay, so I want to show you this from the IMF. So there's the United States debt to GDP at 118. So that's as of 12/31/23. And there's Japan at 249, okay? But look at who has higher debt to GDP than the US, besides Japan. You have Venezuela, Argentina, Greece, Lebanon. I mean, these are all countries that have gone through financial turmoil. And I want you to be aware of this so that this doesn't catch you off guard. So the Federal Reserve Bank of Atlanta gives an economic forecast. Their latest estimate shows that for Q1 of 2025, real GDP is at negative 3.7%. So that's for Q1 of 2025. I mean, who knows what Q2 for 2025 is going to be. But the problem is that if the economy contracts, that means that the government's going to collect less tax revenue. And that means that, again, as I said, debt to GDP is going to go up and it might spike up. And now there's renewed concern. So you're probably going to see this more in the headlines in the upcoming months that the United States credit rating will be downgraded again. So this time from Moody's. So Standard & Poor's downgraded the creditworthiness of the USA in 2011. Fitch downgraded the US in 2023. So it wouldn't be a surprise if Moody's did a downgrade this year in 2025. So these downgrades, they're just a warning that the government is on an unsustainable fiscal path. So this is just a heads up that this could happen soon and cause a market reaction. Okay, so that's today's update, and I just wanted to show you the numbers. So in terms of government spending, in terms of the deficits, nothing has changed. You saw numbers. As a matter of fact, it's a little bit worse this year compared to last year. In terms of the economy, if we get a negative figure for Q1 and then Q2 again, then 2 quarters of contraction, that's a recession. In terms of the labor market, in terms of jobs data, that's going to come on Friday, so I'll keep you updated. Please subscribe. I'll keep you posted. Thank you for the support, and wish you a very nice day. Take care.